It's 3:30 and we're going to talk about taxes now. What a time to be alive. Yeah, but I mean, in this world, nothing can be said to be for certain except death and taxes. This line is not mine, but Benjamin Franklin already said it more than 200 years ago. And I mean, the same clarity now applies also to the world of crypto taxation, which has become one of the most pressing issues for investors today, maybe. And therefore, we want to discuss in the next 35 minutes, two questions basically. Why is crypto tax evasion becoming harder as authorities are strengthening their tools and getting more aware of all the tricks that people might have used in the past? And why should investors not panic if they haven't declared their taxes yet? And for that, we brought some of the best experts, I think, to discuss that. And I hope to pave also way through the tax maze. And I would maybe ask you guys to just briefly introduce yourself so we know what your background is. And then we start with the panel.
Yep, should I go ahead? I'm not on the slide yet. I was a last-minute addition to the panel, so you need to look me up on LinkedIn. My name is Werner Hoffmann. I'm one of the founders of Pekuno, and we are doing crypto tax reporting. So all the hard work of going from the transaction on the blockchain or on a centralized exchange to the final profit and loss calculation that in the end goes to your tax advisor and into the tax declaration. And my background is I used to work for the tax office. I have a degree in tax law and I also have a degree in computer science. And I struggled with that very same problem myself and was like, this can't be the case. I'm working for the tax office. I should be able to do my own tax declaration. And then I started researching at a very early time where not a lot was around back then in like 2017. And that was like what got everything rolling that I decided to go into this field. And because I'm not a tax advisor, I was like, okay, that's some service I can offer. I'm allowed to offer this reporting part. So it's quite technical actually what we're doing to really understand what's happening on chain and what's the interpretation on what has to go in the tax declaration in the end.
Hello, my name is Quehenberger, so-called Q. Where is she? I'm the CEO and founder of AQ Forensics. It's an Austrian-based on-chain analytics company, and we are supporting people who lost their cryptocurrencies or who fell the victim of a ransomware attack. So we are helping them providing the ransom, tracking the ransom, and opening some suspicious transaction activity reports on the WASPs, which have been used from the hackers to off-ramp the cryptocurrencies. We are also helping people to off-ramp their early investments in cryptocurrencies by providing them a proof of source of funds reports for cryptocurrencies. And together with Joerg, we wrote a book. It's called Bitcoin Steuerzunami or Tax Tsunami 4.0, and I think 5.0 is waiting. So.
Hi everybody, my name is Agnieszka Mojsiej. I work at CoinTracking, the biggest, oldest, my opinion best, crypto tax calculator and portfolio tracker. And our passion is to make crypto taxes as simple as possible. Our platform aggregates all of your transaction data and does all the heavy lifting of and very confusing part of crypto taxes, which is all the calculations and prepares the tax reports for you. Personally, I'm also an investor in crypto, and what I'm trying to do is to translate all the confusing things, all the information, all the rules into a language that everybody can understand and utilize easily.
Got my own one. Hi everybody, my name is Florian. I'm a founder of Blockpit, so I have a tech background. Started investing in crypto 10 years ago. ICO hype 2017, 20 different exchange accounts, wallets, mining in my cellar, complete chaos, and that kind of resulted in us founding Blockpit, also a portfolio tracking, tax calculation platform, mobile app, web app, helping you with documentation, but also tax optimization, because if you know what you're doing and you have everything set up, then you can also do a little bit on the optimization part of taxes.
Okay, my name is Joerg Andres. I'm a lawyer and tax advisor since more than 30 years in Düsseldorf. Since more than 2 decades now, I'm specialized in the taxation of cryptocurrencies, as well as in cases of law of succession, which is everything regarding digitalization of what anybody might leave after dying. This is a question that comes up next. So I'm specialized in this field since 2018, when I wrote the first book, Steuertsunami Bitcoin. As Albert just mentioned, we got the 4th edition in 2024. Now we are preparing the 5th for Easter next year. Just keeping the pace and to inform the normal investors, the private persons thinking about what can we do regarding especially cryptocurrencies to make sure that we are part of the future and somehow in front of whatever might come up regarding questions from tax authorities. So it's very important, and probably we'll talk about questions of documentation and alternatives to possible solutions the tax authorities in some reasons might expect from the one or the other, but which might not be possible to realize. Especially regarding the fact that the tax legislation in Germany regarding cryptocurrencies and blockchain questions is not really ahead of the situation. Many expressions are not defined, and this makes it really complicated, and this is one main field that we are working on for our clients.
Yeah, thank you very much. We'll definitely also talk about that point. But maybe to just kick it off, what would you say is in general the most common mistake that crypto investors make with or like when it comes to taxes? Werner, maybe if you want to elaborate on that.
I think my answer will be repeated later on. So it's tracking, obviously. There's a lot of things you can fix, but not having the information, not having the data ready is like one of the biggest mistakes you can make, because that opens you up to the tax authorities just estimating your profits, and that will never be in your benefit. And if you can't prove when you bought assets, you can't prove that you had the 1-year holding period, you can't deduct your the base cost of the asset against your selling and correctly calculate your profit. So it all adds up to have a proper documentation. Handing over to the documentation tools.
Thank you. Well, that's true, but what I would add to that is a lot of people get into crypto investing and not think about the taxes at all. They get excited, they trade, they do the crypto part, but without having any idea how complicated some of the things they participate in the crypto space are tax-wise. So what I would advise anybody to do before touching anything in crypto space is please think about this and see if it's worth it, because the profits are often not worth the headache later on. With the thousands of transactions, with the inability to properly find the information that you need for your taxes, this is just think about the taxes.
Yeah, think about the taxes. It's also putting some money on the side for taxes, especially in Germany. When you trade crypto to crypto, you realize a potential profit, and then you are still in a highly volatile asset. And we've seen a lot of cases where in 2017, 2021, right, people realized some gains during the end of the year, and then the market crashed, and you still have to pay taxes on those gains, but maybe you don't have the money anymore. So having that know-how on at the end of the year, and potentially also like offsetting profits, losses, so that you then don't end up in this situation.
Yeah. Jörg, maybe one question to you. You as a tax advisor, also as a lawyer, do you feel like that these cases where people come to you because they messed up their crypto taxes have increased over the past years, like from 2018 maybe till now? What's your resume?
Yes, definitely. It was part of the experience we made, that starting in, let me say, 2019, we had the first few cases coming in, and this was increasing by 2020, and it still went on in the same direction till today. What is remarkable from my point of view is that people are more and more shocked by what might come up the later they come in with a decision to declare in a relatively late status they are in, you know. And of course the questions are always the same. What do I have to deliver to make sure that nothing bad might happen to me? And the longer people wait, the harder it gets to find a suitable solution for everyone. Because my impression is that sometimes today the tax authorities are expecting too much detailed documentation which just does not exist. So I think if somebody is willing to declare afterwards what he might have missed during the years before, it's a basic thing for the tax authorities not to expect too much. I mean, as long as somebody is willing to say, okay, I made a mistake.
But how could then a compromise look like in your opinion?
Yeah, the compromise in the end normally is that we make a proposal about how this case might have been, because nobody really knows the details, what has happened, and finding understandable arguments so that the tax authorities can say, okay, this might have been the case, so we can say that's it. Yeah, we take our taxes regarding this case. We were just sort of constructing, you know. It's really a question of how far can we go, and from which point of view we have to accept several things, because documentation is missing. That's always the same.
I mean, we now already complained a little bit about German tax authorities. But Aga, maybe one question to you. You at CoinTracking, you have so many offices also in different time zones, and you know a lot of different tax codes from different countries. How do you assess the German crypto tax system compared to other countries, and what are its strengths and weaknesses in your opinion?
That was the question I was most worried about, because what I'm going to say is going to make me so hated. But from the perspective of a company that operates in over 100 countries, I have to say that the German tax code is really not that bad. Please bear in mind that it's in comparison. So it is pretty bad, it is incomplete, and it's not perfect. But at least somebody at the tax office at least knows crypto. At least somebody made an effort. There must have been education. There must have been experts on board trying to at least figure out some of the rules. So there's obviously some rules missing. And with crypto, we're always a little behind because new types of activities come up. There's always new developments. And so we can never catch up. And how the tax code creators deal with it is often by creating certain vague rules so that they can be applied to maybe some future cases as well. Obviously, the biggest advantage of the German tax system is the 1-year holding period, where after 12 months of holding a specific asset, it is tax-free. And the biggest, we've already touched on this, the biggest disadvantage is the often ridiculous amount of documentation needed. So you not only have to track your crypto in order to just do the calculations, but also explaining to or proving what you've done to the tax office it requires an extensive amount of documents.
Aga just mentioned documentation as a huge challenge. Werner, can you maybe explain what that documentation makes really so complex for users? I mean, because you also do that basically for a living,
That's
right?
what we're doing, basically non-stop and with a whole team of people. What makes it so complicated is like one, I think it's really a mindset shift. A lot of people who are employed, they have their taxes withdrawn directly from their salary, so they have no other situation where they really need to like do a bookkeeping for whatever they are doing in their life. So it's like a really big thing for them. If you're a freelancer, it's a little bit closer to what you're doing already, or you need to collect all your invoices and bills. And from our side, the complicated thing is there's like so many ecosystems out there, so many different blockchains out there. They're all slightly different. There are so many DeFi protocols out there. So I don't want to do a tool anymore after I started working on one and realized like, oh my God, that's so many things you need to implement and to gather all this data. And they also keep updating their things, and the exchanges keep updating their APIs. So it's really about like the first step is the data gathering, and that's already quite complicated. Like how do we get all these data out from a blockchain to be able to process it? And the tools that are on the market help a lot with that. But oftentimes people are using things that are not yet implemented, or they're not correctly shown in the data, so there's always some manual steps. And what we're doing next is like rework through all the transactions to see if they're like labeled correctly, if they're imported correctly, and that starts with like super easy things like timestamps. There is not one timestamp. Blockchains don't have timestamps. Some exchanges be like, oh, once you added a transaction to the memory pool, that's the timestamp of the transaction. And other exchanges are like after 6 confirmations, and the difference between can be like 2 hours, and if they're swapped, then tools don't recognize, oh, that's the deposit matching with this withdrawal, and then you need to like edit timestamps to make a match, and so the tool can recognize it as like one transaction. Things like that. It's like a million little details that need to be fixed and make it quite intense. Like everybody who's done their crypto taxes probably knows, it takes a whole weekend if you've not done a lot, and sometimes it can take weeks if you've been quite active or in the DeFi space, and yeah.
I mean, we complain now a lot about like German documentation, but let's maybe take a look at Austria. Florian, your company is based in Linz, and I mean, you have seen a major change, I think, over the last years. When it comes to taxes, you also had like that 1 year holding period. Now you have a flat tax of, I think, 27.5%. Which basically applies like on like crypto to fiat swaps, right? But like in general, how satisfied are you with this framework, and what are maybe the pros and cons compared to the German model?
Sure. So we had this tax reform in 2022, and it was a bit rushed. So I think they thought that, okay, we are harmonizing it with stocks and how stocks are treated. So we're now in the capital gains tax category, which is a little bit more attractive because it's a flat tax and not income up to 55%. But they didn't really think further. So now we also have the withholding. Since last year, exchanges in Austria have to withhold taxes for you. So if you sell, you just get less out of it. And that works well if you're only trading on one exchange and you're only doing stuff there. As soon as you're going into DeFi, other exchanges that are not in Austria, it's getting even more complicated than before. And we really have switched from the German model to something completely different that rewards, I would say, another kind of investor. Because we're now not paying taxes on crypto to crypto anymore. So you can trade even stable coins all the way you want, and only once you go back into fiat or actually outside of the crypto pool. So NFTs, for example, they're not included. So if you buy an NFT, it's actually a realization again. So they didn't think about a lot of those things. But you can basically now take the best out of it. We don't have a holding period anymore, but you can stay in stable coins, take a loan on those. So there are a few options how to use it, but it's completely different investor profile.
But would you say that it kind of helped in terms of documentation? Because I can imagine you had probably the same issues as German investors. Has it helped to like switch the model?
No, you don't save anything on the documentation because you still need to have all of those transactions that come in between documented. I think the only framework that does a good job here is like Switzerland. It's just a wealth tax. Take a look at your portfolio at the end of the year and pay a percentage on it. There you can save something, but then again, they also have some things on staking rewards and that you have to track again. So there is no real good solution that helps you with the documentation problem.
I think another advantage that was introduced was this this automated withholding from exchanges once you transfer it to fiat. Is there like a possibility, or maybe you can elaborate a little bit on that, but also say how it would be maybe possible to include, or like, include something like that also in Germany maybe.
So we do have it in Austria now, and it's mostly, I would say, 99% of those taxes that are withheld is Bitpanda. So they are the largest provider in Austria and they have the most volume. They withheld around 35 million euro in taxes for last year, way less than the regulator actually expected. And the big issue is if you deposit now funds into Bitpanda, like let's say I have a Bitcoin bought at Bitvavo and then I transfer to Bitpanda, then you again have to prove documentation, what was the acquisition cost, acquisition price, so that they can do the taxes for you. So it's just additional steps, and then again you need the documentation. I don't think that Germany is actually planning to go in that direction. It was discussed in the Bundestag sometimes, but so far my latest information is we're going to stick with the model that we have.
Joerg, maybe to pass the question to you, what would be your opinion on having like this, or like, would it be like legally possible to include this automated withholding on German crypto exchanges?
Yes, of course, it would be possible. The only thing is, still in the German tax law, we don't have any sort of expression regarding cryptocurrencies, Bitcoin, whatever. It's not mentioned. And this is the big difference to Austria, for example, where the parliament set a new rule. This is what I'm talking about. I was not talking about the competence of tax authorities. I was talking about the missing basis. There is no basis in tax law. And
it should be included in tax law, basically.
Just a second. When we are talking about the Federal Tax Court in Munich, what they decided, we were both there, when they decided, and we were listening to what they were saying, and we were reading what was written in the decision afterwards. And this decision tells you that the basis is missing. And this is what I'm criticizing, and this makes it so complicated that on the one hand, there is not this basis which would be necessary, and on the other hand, the taxpayer has been told you had to have this and that, which is not written in the tax law. And from my point of view as a lawyer, I do have to pose questions in this situation. I cannot just accept it, And this is what I'm talking about. And from this point of view, it's essential to have, let me say, a basic ruling regarding what is your obligation to make a documentation as taxpayer, and what is not your obligation. This differentiation is basic, and this is missing.
Werner, would you agree on what Joerg just said? Do we need like a major improvement when it comes to the law, maybe?
I mean, Joerg is one of the key people in this area, so I definitely agree with him. I do not agree. I think we should just shut up. Like, the current regulation is really good with this 1-year holding period, and I think everything that comes next will make it more expensive. So there is like corners and things that would need to have some clarification, but overall I think we are very privileged to have this regulation, and I think once they start touching it and start to make a dedicated crypto tax law for some areas or for everything, I think it will only get closer to the Austrian rules or like some fixed percentage or something. So therefore, I'm personally quite happy with the 1-year holding period, and I assume that we probably would lose that if we change anything and have a dedicated rule. But I do agree, like there is still this discussion, is crypto taxable under German law at all? Like that's something that can certainly be discussed, and the ruling said yes, but without giving us a really conclusive explanation on why. Yeah. So
just to avoid a misunderstanding, of course, we have this decision, we have to accept this decision. The question is, what comes out of it? You know, what is the perspective that we can or have to develop with it? And as long as there is no such specialized tax basis, of course, I have to find arguments in special cases where I have to tell the tax authorities saying, okay, my client didn't do anything wrong. That's a totally different question. And as long as there's nothing wrong, for example, there's no basis for a criminal tax impact, you know, then you cannot say this was wrong. He had to have this sort of documentation. This is not available, so he has to pay for that. No, that's a different question. And that's something we have to discuss.
I mean, these discussions will probably also increase in the future as we have now 2 major regulations that are coming into effect. I think from 2026, DAC 8, if I think you all heard of it. It's basically, from what I understood, it's like an, crypto exchanges, crypto providers are basically now obligated to send tax information on their clients to the tax authorities. Werner, maybe you can elaborate a little bit on what these frameworks really mean for everyday investors then in the EU, but also like in the DACH region.
Yeah, and even further, it's the whole OECD region. So if you've never heard of CARF, the Crypto Asset Reporting Framework, or DAC 8, don't worry about it. It's something that only applies to exchanges. But you're still tangentially touched by the ruling because your tax office will very soon know everything that you're doing. So the rule is that every centralized exchange that is regulated in a country that follows one of these two rulings has to report to the local regulatory authority. And what happens next is that the different authorities from the countries are exchanging these information. So if you can't say, oh, I'm only trading on Bitpanda and that's Austria and the German tax office will never find out. No, Bitpanda is reporting to the Austrian, what is it, BMF as well? Okay, and they then exchange data with the German BMF, and they will distribute the data to your local tax office. And once they have the so-called Anfangsverdacht, so beginning suspicion, they will just ask a lot of questions. Like they will assume you did not start on the 1st of January 2026 to trade with a volume of 100,000, if that's what they see in their data. They will assume you started much earlier, and they have a very long question catalog. I think it's 10 or 15 pages, just questions plus all the data they want, and that's basically what's coming up. And almost any exchange is in one of these countries and under one of these rules. So it's at this point really more or less a matter of time how long it will take the tax office to get some kind of information that you are active in the crypto space. And once they have like this first piece of information, they will just ask more and more questions from there on.
Albert, to include you also in our conversation. I mean, you and your company, you also had touched had conversations with tax authorities, with also the police and stuff. I mean, that's your everyday work. But from your perspective, how well prepared do you see tax authorities when it comes to investigating crypto-related tax fraud? Maybe what tools do they use, and which expertise are they relying on?
That's a very good question. From my point of view, I think they are not very well prepared at the moment. It's quite similar to the law enforcement agencies. They do understand what's happening from a technical perspective. They know how to interpret and read all the data you can find on chain. they are using tools like Reactor from Chain Analysis or Expert from Crystal or TRM Labs or Ignaio. The Austrian BMF bought a couple of licenses from GraphSense. It's out of the Austrian Institute of Technology. And they are training currently the first investigators, tax investigators, with or on these tools. So that's for them, it's a game on the long run. Yeah, they don't have to understand everything at the first day when DSE 8 is activated. They have time, and
so it's basically some sort of like maybe a pyramid. So you had like the the law layer laid out now, and now comes basically phase 2, where you basically try to implement the software in the tax authorities.
Yeah, but I think one problem is there are too less experts on the governmental side. If you are following Florian, according to him, he trained 800 tax investigators in Austria so far, but yeah, you can't even give all of them on-chain analytic tools. They are too expensive.
Okay. Joerg, maybe to also touch now the point where we talk about what do you actually do if you haven't declared anything yet, and you don't want maybe also to go to prison. What do you do? Like, what would you recommend a person that hasn't declared anything yet? What should be their strategy to avoid jail?
Cutting a long story short, expect the worst.
Your microphone.
Cutting a long story short, expect the worst and hope for the best, you know. To be honest, the crucial point is how much preparation can your client invest. What is available and what is missing. It's absolutely important to get sort of realistic impression on what we're talking about in a case before we are starting, before we are declaring anything. Because maybe if something might pop up later, this could be.
Maybe you can explain who Papa Platte is. Huh? Maybe you can explain to our audience who Papa Platte is.
Yeah, just
Papa Platte. Sorry.
Yeah?
Sorry, there was a misunderstanding from my side.
So I don't have to explain. So preparation is the crucial point, and from this day on, when you are sure you did everything what you can do in this case, then you can say, okay, now we go ahead for it. But if you're not sure about that, it's really hard to give a good advice in this regard. Because, for example, if the client tells you that is the documentation, we find out with the help of the colleagues here what we are talking about regarding the tax impact, then the next question is, does the client have enough money? Just in case this might come up, a sort of questioning from the tax authorities saying, okay, we would be happy if you could pay, let me say, €1 million within the next month. This is a big question, you know. And from this point of view, we have to always find a way how we could cope with problems of missing documentation to, in the end, find a way to get this case to a solution so that everybody is more or less happy with it. That's the problem, to give you an impression on what we're talking about.
Florian, Aga, maybe one last question to you, and then I would also give the opportunity to the audience to ask some questions. If we look like in 10 years, will crypto taxation be as easy as stock taxation?
Is stock taxation easy? Probably. I mean, you can't
easier.
you can't say it for everywhere, right? It's gonna be always a localized topic. It's gonna be different in every country, but we do have something completely new technological-wise. For stock taxation, you always have a company that has a stock, it trades a stock. In DeFi, you don't have this single entity that can withhold your taxes. So you always have to find a kind of solution to also include the DeFi part. And that's not going to be possible. That's how DeFi works, right? So I don't think we're going to see anything coming close to stock taxation.
Okay.
Yeah, I have to agree with Flo. I mean, we would all love an easier and more transparent system for crypto taxation, hopefully where we don't have to do anything and it's done for us. And we're kind of seeing the attempts with the withholding by exchanges, and there's attempts to do it, but that's just how crypto works. So either we change crypto or we accept the fact that it's always going to be an issue.
Okay, do you guys have any questions to our panelists? Now is your chance to ask something. Yes, please.
I have a question about changing crypto. Are there any initiatives to standardize the DeFi protocols or structure them in a way that the information that is sent from there will be useful for your tools to automate the tax reporting and to help you basically? Is this included to improve the blockchains the way they report in your tools?
That would be nice, right?
Yeah, that was what I was thinking and trying to not say it. But yeah, I mean, we're in talks and with negotiations with all sorts of, with the creators and with the developers of projects all the time. And our sincere wish is for them, we tell them what we need. It's not like it's a mystery. We tell them what we need. If we don't get it, if they don't want to do that, if they can't.
Yeah, it's not on top of the mind, right? They're not earning money with that.
Exactly.
That's the issue. It's always the last thing that they are building or putting resources into because they're not going to earn any money with it. But on-chain, it's solvable, right? The data is here. If we can somehow manage to read it, it's okay. The bigger issue is the centralized exchanges and there being no standard whatsoever to the data that they're reporting.
Okay, any more questions? Because I think our time is already up. But if anyone...
I think we will be available for questions
For questions, maybe also later. I saw you had a question over there, but you can just come to us because I think the next panelists also want to start at this point. Maybe just one major thing, just do your taxes, please. Yeah, and thank you very much for your attention. And if you want to discuss further details, then please, yeah, feel free to approach us. Or not me, but the expert.